Hi guys. Today we will analyze MetLife stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been an average performer in the overall market. The long-term trend is still neutral, but the short-term trend is positive. It is advised to wait a little bit longer to see how this turns out. Strong support levels are around $65 and $60. Next strong support levels are around $58, $52.50 and $42. Strong resistance level is around $72. In the last month the stock has been trading between $57.80 and $67.60 range. It is currently trading near the high of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 4.2 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Intrinsic values calculations. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. The excess return model. This approach is used for financial institutions where free cash flow is difficult to estimate. Then, we will use valuation based on earnings per share, EPS, 5-year average P/E ratio and expected growth rate. First model. Excess return model valuation. This spreadsheet contains some financial data that we will use for the stock valuation. In this valuation I will use margin of safety. 30%. Once we actually figure out what we think this stock is worth, we are only going to buy the stock if it gets 30% of what we think it's worth. It gives us a big margin of safety if our predictions are wrong. In other words, when something is worth $1, I want to pay only 70 cents for it. I want to be conservative with financial institutions. So, my margin of safety is 30%. According to our formula, the fair value of the stock is $45.81. When we apply the margin of safety to that value, the fair value of the stock would be $32.07. That's the price that I may want to pay for this stock. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for MetLife is 4.01. Minimum rate of return. I will use 10%. Because when we invest in individual companies, we are looking for a higher return than the S&P 500. For MetLife, analysts forecast growth rate around 4% per year in next 5 years, and future P/E around 9. I will use 3 different scenarios for MetLife Company: bad, average, and good. First scenario. MetLife will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be a low, 2%. Future P/E would be a low, 7. In this case, the fair value of the stock today would be $14. Second scenario. MetLife will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 3%. Future P/E would be average, 9. In this case, the fair value of the stock today would be $20. Third scenario. MetLife will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 4%. Future P/E would be high, 11. In this case, the fair value of the stock today would be $27. As you can see, today the stock is overvalued, $66, even if we expect the company's high performance in future. The company has a pretty bad profitability rating, and there are some concerns on its financial health. Also, the stock is expected to show a small growth in revenue in the next 5 years, 3 to 4% yearly. Based on that, the stock looks overpriced at the moment. I may consider buying the stock when it drops to $30. Company's strengths. MetLife is among the largest global providers of insurance, annuities, employee benefit programs, and asset management with 90 million customers in over 60 countries. The company has strong brand identity, diversified product offerings, and wide geographic footprint. MetLife earnings will benefit from coronavirus vaccines, higher long-term interest rates, and management's focus on protection-oriented products. Analysts also see a positive view of the company's international expansion plans. MetLife's international operations, particularly Asia and Latin America, provide opportunities for growth. MetLife's reorganization will lead to a more transparent entity that produces steadier cash flow. Risks. Risks for MetLife include slow economic growth, high morbidity rates, and volatile equity markets. Regulatory risks and lower investment returns also present potential headwinds. Unlike its peers, MetLife has a smaller asset management business, which typically generates strong returns and higher operating margins. In addition, this means MetLife doesn't benefit much from strong equity markets. Low interest rates are not favorable for MetLife, and its operational leverage to capital markets makes its future difficult to predict. The market for life insurance is competitive and commoditized, and it is difficult for life insurers to find value-accretive growth. Given the millions of customers, failure to keep personal data secure could harm the company. The company's return on assets of 0.5%, return on equity of 9.7% and profit margin of 5% are below the industry average. Based on estimates for the next 5 years, the company will show a small growth in revenue. The revenue will grow by 3 to 4% on average per year. The earnings per share is expected to grow by 3 to 5% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.